about the situation as it stands for shipping companies and how much rates have come off both for dry bulk and for tanker. Let's switch to another sector that was active a few weeks back, but there's one stock that stood out, Dalmia Cement. Puneet Dalmia joins in to talk about what's been happening with the business. Puneet, morning. Before anything else, there's been a lot of buzz about how RNRL may be looking to buy stake in your company. Are you in talks with them?
No, we don't comment on speculative stories, and I just want to say that we are not in talks with any company at the moment.
So you're not categorically looking to sell stake to any interested party at this point?
No.
Then?
Puneet, this kind of buzz always surrounds companies which don't have very large capacities. You are not in the market to get in any kind of strategic investor for your business at all, right?
No, as I said, we are currently an expanding company. So an expanding company always needs capital. Our expansion in cement is now complete. Our sugar business is doing very well. So we believe that currently, because we are in a conglomerate structure, the market is not recognizing the growth potential of the company at the moment. And we are out meeting FIIs and doing non-deal roadshows to take our story out in the market. So I think we are stepping up our investor relations effort quite significantly at the moment. We also have further expansion plans to further enhance our cement capacity through our subsidiary Dalmia Cement Ventures Limited, for which we have committed credit lines. We would like to raise capital, but we would like to raise capital at the right price. But I think our focus right now is to take the story out, to make sure that people recognize what has happened in the company in the last 5 years, and to show them what we are going to achieve in the next 5 years going forward. The other thing that we are very focused on right now is to look at various options to unlock value in the company. The sugar business is a separate business, cement business is a separate business. Currently we are offering a combined offering to the investor, and one of the things we are trying to engage on is to potentially look at advisors who can advise us on the best possible ways to unlock value in the company. So I think these are the two efforts which are going on in the company at the moment. We are stepping up our investor relations effort and taking the story to the market, and we are also engaging with advisors who can advise us on the best possible ways to unlock shareholder value in the company.
That's an interesting proposition, that unlocking that you're talking about. If you want to separate out the cement and the sugar businesses, would you consider a demerger? Is that an option for you? Or if you want to create a pure cement business, would you even consider a sale of the sugar business?
I think we would consider all possible options. I think, we are not looking at divesting any of our businesses at this stage. But we would look at all possible options. So we have an open mind in terms of what's the best possible way to create value and to raise resources to, fund our growth plans. So at this point in time, I think all I can say is that within the next 1 month, we would probably finalize an advisor who can advise us on, possible options for us to choose from in terms of, unlocking shareholder value, as well as creating a structure which will enable us to fund our growth plans, which are quite aggressive in the next 5 years.
While you may not be looking at an out-and-out stake sale to an interested party, Puneet, could you look at the option of getting an investor into a specific greenfield project?
Yes, absolutely. So there are various options which are available to us. We can do a follow-on offering in Dalmia Cement itself, which is a listed entity. We could raise capital at the subsidiary level, where we have already incubated projects and projects are ready for construction. So I think various options are available. We could also use our internal accruals, to fund these projects, because these projects require capital over 3 years. So I think as of now, we have not frozen on what is the best possible way, to fund growth. But as I said, we will take a view on this in the next 2 or 3 months. And once we have taken a view, we will make an announcement about, what's the best way to, raise capital.
Not necessarily specific to your company, Puneet, but we've also been hearing reports that cement plants based out of the south are being put on the block, and investment bankers have been approached in order to gauge interest. Is that true, and would you be interested as well in carving out some of your South India-based plants?
No, as I said, we are not looking at divesting any asset right now. We have a very bullish long-term outlook on India. Although I have maintained that my short-term outlook on the cement sector is a little cautious. We may see pricing pressure next year. So for 2 years our outlook is cautious, but our long-term outlook is very bullish. India still has a lot of headroom for growth, and we are not considering any divestments at this stage. So there are speculations in the market always, and we don't like to comment on any speculation.
How much cement capacity are you looking to add, Puneet, over the next 2 to 4 years, just to get a sense of how much capital you would be looking to raise through whatever route, through listed Dalmia Cement or at the subsidiary level?
Right. Currently, our capacity in Dalmia Cement is around 9 million tons, and our capacity in OCL is about 4.5 million tons. So the existing 13.5 million tons across 2 group companies is fully funded. And I think over the next few years these are going to generate positive cash flows for the business, as is going to be generated by the sugar business. But our plans, as we had said earlier, was that we have incubated about 10 million tons of projects in our 100% subsidiary called Dalmia Cement Ventures Limited, which will cost us about $1 billion to implement. The total equity requirement for this project would be around $250 to $300 million. And the debt requirement would be in the range of $700 to $750 million. We have already, we are in advanced stages of tying up, committed credit lines for this project, and we have already put in $50 million from Dalmia Cement as equity. So that will give you a rough idea of, we need about $200 to $250 million of equity to do this project of 10 million tons, and we are going to do that in phases. So, we can pace our expansion plans depending upon how the cycle remains, and depending upon our internal accruals and our ability to raise additional resources. So overall, I think about $1 billion project, and $200 to $250 million of equity is required over the next 3 years. That's the broad number.
You've got a leg in the sugar business as well, and there is some news that maybe the government has taken a final call that the levy quota will be 20% now at a price of 22 per kg. But if that were to happen, would that be acceptable to you and not dent your realization significantly?
No, I think the levy prices have been at a significantly low level. They have been in the range of 13 to 15 rupees a kg, and the government has not revised that number for a while. So I think if the levy price goes up to reflect the market conditions, that's a positive news for the sector. As a company, we also are very cautious about inflation, and we are very cautious about the fact that we have to play our role in ensuring that the government is able to meet its larger agenda rather than our only specific company agenda. And we've seen that too much volatility in prices is actually not good for the industry also in the long term. So I think if levy quota goes up and levy prices are also reflected to support the current market realities, we would welcome that. That also means that the free sugar price will be free, and that may move up further given the current reality. So I think in the short term, we are absolutely willing to go along with the larger country view, as opposed to looking at a narrow view of what is right for the company. But overall, I think less volatility is better for any sector. So yes, we are going to support that move, and we welcome it.
Sure. Just one final word, Puneet, on cement prices themselves, because we've heard they've been on the decline, and in some markets like Andhra Pradesh have actually come off as much as 30 rupees per bag.
No, prices have not come off by about 30 rupees per bag, but prices have come down by about 4 to 5 rupees a bag. And I think I've always maintained my outlook is cautious, and the industry capacity utilization may fall to 80% levels by the fourth quarter of this year. And past empirical evidence has suggested that capacity utilization of 80% does put pricing pressure. And if I look at the past empirical evidence, the prices could correct up to 5 to 10%. But given the consolidation in the industry and the positive demand growth due to stimulus spending of the government, I think this may not remain for too long. So the next 2 years are definitely cautious, and though there will be pricing pressure. So I think that's my broad take on the sector as we proceed to the next year.
Good speaking with you, Puneet. Thanks for joining in today. That's Dalmia Cement saying, no, we're not looking to sell any stake. Yes, we do have expansion plans, and doing a follow-on may be an option. The kind of money that we require is also flashing on your screens. Let's take a break on that note. A little bit choppy for the Nifty and Sensex today. Relcom, though, is a standout performance, up nearly 4% in trade. When we come back, more on the global picture. Shane Oliver of AMP Capital joins in with us.